All right, the big news of the day today was the PPI report came in much hotter than expected. So that was not, the market was not looking for that. So that big three-headed monster I've talked about so many times before reared its ugly head again today. So rising yields, rising commodities, rising dollar, especially the rising dollar and yields. And that was the biggest mover today and the biggest influencer on what happened with risk appetite. So we had a little bit of an exhaustion. Again, not a breakdown, not a huge drop or consolidated, more of just kind of choppiness, right? There's ups and there's downs. I mean, shoot, if since August the 1st, it's pretty much been up down every day except for one extra up day. But it's been up and down every other day. So that's chop, right? That's we saw that today. The breadth that we saw, the really good breadth we saw last couple of days, kind of minimized itself, and with like Amazon leading the way higher from the Mag 7 names, other names doing better. So we'll kind of break down like the patterns that we're seeing in that three-headed monster, and so we can gauge what to expect, how much longer like this bullishness will last, this bullish trend we've been on will last. We'll break that down. We'll also break down the sector moves. There was an interesting sector rotation, especially in light of the last couple of days. So we'll look at that. And then, of course, our trade idea is a stock in the healthcare sector, that very embattled healthcare sector, but a rebounding healthcare sector. So one of the names, not UNH, right, not the big name, right, that's been in the news here, especially in the after hours, but one of the most common names had a nice breakout pattern itself. Trading it a little differently what we have been, so I'll talk about why, and then that will be our video for today. So let's go ahead and get started. Today is Thursday, August 14th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. The S&P finished on a high note after gapping about 1/3% to the downside this morning. One of its very, very rare opening gaps ended up rallying and finishing flat on the day, but above, not only above where it opened, but above yesterday's close, barely, but above yesterday's close. So good recovery from the open for the S&P. The intermediate line, again, still in the reversal zone, still above the 90th percentile, still above market sentiment. So that's all very bullish. The near-term line did cross. Remember, the crossover, the near-term line of the intermediate line doesn't matter when it's in the reversal zone. It only matters down here when it's between the reversal zones, right? That's where you get your bullish, your bearish, and your bullish crosses. And so that's not an issue right now. The momentum line dropped. At the lows of the day, the momentum line was pretty oversold, but then ended up coming out of the reverse. So we had a bullish intermediate confirmation signal for a good chunk of the day. Again, for those who don't know, that's the combination of a strong intermediate bullish posture and an oversold momentum line. That combination is a buy the dip type signal, and we had that for most of the day. We ended up, again, because we came off the lows and because we actually moved up higher on the day, the momentum line was down because of the smaller range, but ended up out of oversold levels. So still in bearish territory. So again, you can see the past precedent is for there to be a bounce. When we're at this level or lower, we tend to kind of bounce right back up off of this. So it doesn't mean we will, right? Especially with the near-term line as high as it is. And it doesn't mean we'll bounce up like 1% tomorrow. But that pattern there suggests that we could have a good bullish end of the week. Again, I'm not anticipating anything huge, but 1/4% move plus or minus a little bit would be not unexpected at all. And that would be like, again, we're up 3 days in a row. We were only down on Monday. We had the pretty big up day on Friday, but then we were down on Monday just slightly, and then we've been up 3 days in a row now. So that would be 4 out of 5 days to the upside. We were up all 5 days coming out of the options expiration in July, and here we are, doing pretty well going into the options expiration here in August. Only one more day, right? And then we'll have 5 weeks in between the August and September expirations. So a good pattern. If I take a look at the NASDAQ 100, it was down today, which is interesting because mega caps kind of led the way higher. If you look at, again, the Magnificent Seven names, Microsoft, Apple was down a little bit, but Microsoft was up, Nvidia was up, Amazon was up quite a bit. today. That really kind of drove the markets. So, and a few others, Tesla was down a little bit, Meta was up, Google was up, so Broadcom, Netflix were both up. So for the most part, the bigger names led the way higher. So it's interesting to see that the NASDAQ 100 was apparently more influenced by Apple than any of them because of its downward move. Only slightly, though. And again, this is a bullish intermediate confirmation signal, the combination of a strong bullish posture, oversold momentum line, and the near-term line still in bullish territory. It's dropping. It's out of the upper reversal zone, but still in bullish territory. So we'll see. It can go one of either directions. We can go down another day and bring the near-term line lower, but again, considering how high it is, it probably wouldn't, it's probably not going to drop down below 20 tomorrow unless we really have a down day, right? That would be something unexpected to have to come up, again, kind of like this, right? Where, all of a sudden we were, not so bad, 66th percentile there on the near-term line, and the momentum line was, had been oversold, but then, out of nowhere, right before February expiration, we had a big down day, and then that kind of left. So it has to be something like that, where it just kind of really comes out of nowhere. Mature trend. We were mature then, we're mature now. So it can, we're more prone to it now than we were early on in this intermediate run when we were very far above the moving average. But it doesn't mean that will happen. The odds of it happening are still relatively low. If I take a look at the Dow Jones Industrial Average, it was slightly down today, but pretty much flat, still consolidating the gains from the last 2 days. Really good move in the last 2 days. Intermediate line still moving higher, still below market sentiment, but you did have the bullish cross of the near-term line up above the intermediate line. Remember, that matters when you're between the reversal zones, and it did get well into the reversal zone. So I don't think we're done with this near-term rally. And then finally, the Russell 2000, you can see the intermediate line also still below market sentiment. It hasn't jumped above the reversal zone yet, like the large cap indexes. The intermediate line, the near-term line did cross above it as well and got way high in the reversal zone. Very good move in the last 2 days. And we're consolidating. We're down 1.25%, but you're still up quite a bit from, what would that be, Tuesdays? Mondays. We're still up quite a bit from Monday's close. Let's see, that would be Monday. Yeah, so there we go. So this would be Monday, Tuesday, Wednesday, Thursday, and then of course tomorrow. So yeah, so I'm thinking today's Friday for some reason. Yeah, so from Monday's close, we're still up and we're still above these old highs, and we're still bouncing off the bull tag, and so none of that's an issue. And again, intermediate confirmation signal. Even though the intermediate line's not above 80, you still have the dark green shading. So dark green shading with an oversold momentum line typically leads to a buy the dip signal, and we'll see if this was enough of a dip to produce even just a bounce up to the upside. All right, well, that does it for the Market Outlook preview video. You can get the full version of this video, about a half hour in length, at marketscholars.com. All of our subscribers at Market Scholars get access to that, including our foundation tier members, which start at just $29 a month or $299 a year. You get 2 months for free when you subscribe for the full year. Our foundation members get access to all of our Market Outlook videos every day. They also get access, and in each of those videos, there's a trade idea. So in tonight's video, there is a trade idea that I posted. You also get access to our Market Outlook live video. That's where we actually post those trades right before the market closes. We also manage all the trades from old Market Outlook videos. You get access to our Market Outlook live trade tracker, where we keep track of all these trades. And see how they're doing from the beginning of the year all the way to now. So you can kind of see how much value you're getting out of these videos relative to how much you pay to get them, which is, we're talking $10,000 of gain so far this year relative to $299 just to get access to the videos. So that's our foundation tier. Make sure you use the link in the description or the comment down below to get to that. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment, share it with others. Follow me on Twitter, Facebook, LinkedIn, social media, all the social media accounts. Like our content there. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.